So today we're going to look at a stock that crashed big time yesterday, and it is a stock I own, and I've got to say I was really pissed off after seeing the drop. I don't normally get frustrated at the stock market, I don't normally get frustrated at all, but yesterday and even today I kind of went, that is so frustrating. And what I'll show you in a second is why it's so frustrating, but this is sometimes where you look at the stock market and you go, sometimes you look at the stock market and you go, there's a bit of luck element to it, and I just don't understand how this stock has kind of got into this position. So we're going to take a look at this stock today. It's called PDD, or what I'm calling at the moment is post dip depression, because that's what it is. Yesterday I was doing the stock market yesterday. After the drop that happened in pre-market, I went, I'm not looking at the stock market today. And even today, I didn't even want to record this video today, but I thought, you know what, I'm going to do a video for you guys to kind of just talk about that. Sometimes this goes on in the stock market. It's a Chinese stock, and honestly, after the drop that's gone on in the last kind of days, I'm like, I don't even know if I want to touch any more Chinese stocks going forward. But I don't know if it's just a stock market thing as a whole. But anyway, I'll show you why I'm frustrated today. Let's get started. So the stock we're talking about today is PDD Holdings, post dip depression, and yeah, 138 billion market cap, still a pretty decent size. 13 times earnings, and yeah, after the drop that it's been on yesterday, the stock is now down 31% year to date, which is unbelievable. Now, what is frustrating about this stock, and what I was so pissed off about yesterday, is that I own this stock. I've owned this stock for around about just coming up to a yearish, I would say, and I've owned this stock through very good numbers. I've held it through the likes of November 28th on their Q3 earnings were very impressive. They came in with nearly a 30% beat on the EPS. They grew at nearly 94%, and the stock was rewarded with absolutely nothing. I own this stock through the Q4 earnings, and the stock came in with a nearly another 30% beat on the EPS, 123% year-over-year revenue growth, and the stock was rewarded with basically nothing. The same story continues from the whole time I've been holding this stock. I've owned this stock through a couple of earnings, and I've seen this company come out with mega amounts of beats, and the stock has been rewarded absolutely nothing on the share price, and that's been frustrating. It's been frustrating to see a company that not only beats and is growing at very good rates, it's not just doing good numbers, it's beating those very good numbers that were expected as well. And you'd say, well, maybe it's just the valuation, maybe it's all kind of priced into the stock, and it's not. You look at PDD right now, 8 times forward earnings. Now, this could change a little bit because there was some talk about the profitability, which we'll get onto a little bit, but even with some declining profitability numbers, at 8 times forward earnings for this business is just crazy. And to show you guys, this company actually didn't make profit until 2022. And historically, it's normally traded around probably 20-ish times earnings. So the company is way below what it normally trades at. The numbers are insane. Imagine talk about a company that is 8 times forward earnings, and it's just come off the numbers that they've done, which we'll get onto into a second. But if I was to say to you guys that last year when I started, let's say, buying this stock here, I don't even know which point to kind of go from here, but let's say from the start of, I don't know, let's go the midpoint of 2023. Let's say that when I started buying that stock, and I told you that the company currently does 195 billion in revenue, 165 billion of revenue, and the company then goes on at the end of the year to do 409 billion of revenue. So the company over doubles the revenue that they're doing. If I went to go tell you that the company went from 41 billion in profitability, and then it went up to 118 billion in profitability, the profit would nearly triple in that time frame. And if I went to go tell you, by the way, that company that did those numbers, doubled the revenue and their profitability tripled, by the way, that stock would actually be down year to date 31%. It doesn't make sense, does it? And that's the really frustrating thing. It's the frustrating thing, and it happens a few times I've seen where you own a stock, you bull thesis around it plays out, and even in fact, it doesn't even just play out. It's even better than what you think. The EPSs are coming in 30% higher than what you were expecting. The revenue is even coming in higher than what's expected, and you get no reward for holding that stock. But then the stock then drops 30% when there's kind of a little bit of weakness out there. It's like, give me a break, guys. Like, everything that you expect to happen happens. The valuation's insane, and you get no reward for it. And then as soon as something negative comes out, you slapped around the face. It's just so frustrating because, you know, when you should be rewarded, you're not rewarded, and then when as soon as something goes wrong, boom, you know, it's down 30%. It's absolutely crazy. Now, what happened with the drop here is China's PDD suffered a 55 billion market cap wipeout after flagging some uncertainty in the market. So they came out with their earnings. I don't know, have I got the earnings somewhere? Is this the new earnings? Yeah, this is the new earnings. So the beat on EPS, once again, no small beat on the EPS. It came in over 10% higher than what's expected, which is incredible. Revenue growth did miss slightly, as you can see here, which wasn't a big worry because you know, the EPS was a lot better, and that's probably what we're more focused on. 86% revenue growth is still absolutely ridiculous for a company at 8 times forward earnings. You call that Nvidia? It trades at 100 times earnings. I don't know. Yeah, crazy. So the reason why that PD, you might have noticed this already, PDD's numbers are all over the place, like on analyst point of view, is because PDD don't actually guide their numbers. So that's why analysts are always guessing, and that's why they're always quite way off, is because there's no guide here. But overall, what I'd say is that, you know, when I look at the numbers that came out yesterday, I was like, yeah, amazing, you know, because, you know, you look at you got to remember, you're paying 8 times earnings for this business, and you get a company that's growing at 86% year over year. And the profitability, I mean, I've got it up somewhere, the profitability, let's have a look here, operating net income. So net income here, up 144% year over year. This is insane. Like, this is what is so frustrating, because you've got a company here that not only doubles the net income goes up 144% year over year, and you don't get rewarded. It's an absolute killer. It's an absolute killer. That's what it is. However, there was some weakness in the guidance. That's why the stock did drop. Now, like I said, PDD don't give any guidance out. So I think maybe worst case was assumed in yesterday's price drop. But they basically came out and said that however, we are seeing many new challenges ahead, from changing customer demand, intensifying competition, like Shein, for example, uncertainties in global environment. I think we've seen nearly every company say that in some point of view that's a direct to consumer. And we will enter a new phase of high quality development that calls for increased investment. So basically going to reinvest into the profitability. So we're going to see the revenue slow down, and also the profitability won't grow, or maybe decline slightly because of the increased investments into the business, which, if it gets the rewards, is absolutely fine. And you got to remember as well, like, it's a good time to invest for the company because they've come from a point of view where, you know, they weren't a profitable business for a while. Granted, they did do decent amounts of free cash flow, but the profitability has really ramped up. It's gone from like an 8% profit margin, 13% profit margin, up to 26% profit margin. So, you know, this is probably a really good time for them to start reinvesting back into business, which is absolutely fine. You know, the company's still going to generate, you know, you're talking nearly 80 billion of Chinese yuan a year in profitability, which is still, you know, very attractive. So there's not much of an issue with that. They said that we benefit from improvement macro. However, we see, is that the one? Yeah, that's one we've just been through. They said that we have communicated this on numerous occasions, that profit growth in the past few quarters should not be used as long-term guidance, which is fine, because you look at the profitability they throw off. Even if the profitability stagnates a little bit, goes down a little bit, they're suffering off good amounts of profitability. And they said that the decline in profitability is inevitable. So yeah, I think realistically, it's fine having a bit of profitability and reinvest into the business at the moment. There's not a big issue there. And they said that we believe that sacrificing short-term profitability is necessary. A clear downtrend in profitability is expected, but we are prepared to invest firmly and tastefully in the platform for long-term health. This is a decision that management agree with. So yeah, I mean, this is why I think maybe the stock went down yesterday. Is that basically they came out like, we know the growth that, you know, PDD are going to do, and, you know, this 80% growth isn't going to be sustainable forever, but it's realistically still going to grow at 20-30% a year. The only thing is, like, they talk about profitability going down slightly. I mean, I don't know what it goes down to overall, and that's probably what the market priced in. And we talk about profitability going down by 10%, 20%, 50%. So this is where management probably from PDD screwed up, because like we said earlier in the video, they don't normally give guidance, and probably for something like this, they should have given a bit of guidance, like, we expect profit margins to maybe go to these sort of levels. So it kind of calmed the market down a little bit of where they expect the profitability to be at. It's the time they probably should have given guidance, and that's why management kind of slipped up a little bit. But realistically, like, you know, even if profit goes down like 10-20%, what we're going to be talking about, like, PDD is going to be at like 11-12 times forward earnings instead of 8 times forward earnings. And realistically, this company's still going to be growing like 20-30% a year. So should a company that's growing like 20-30% a year be trading at 11 times forward earnings? No. And I don't understand why the market dropped so much on this stock. I don't understand why the market was never rewarded to the stock, and now I don't understand why the market's absolutely tanked the stock. Now, what was interesting is that in terms of shareholder returns, we are still in the investment phase, so we don't think it's appropriate for repurchase of dividends and share buybacks. I don't know if they should have said this directly, but they probably should have, maybe calmed it down with like, it's maybe something that we consider in the future. I don't know, maybe not directly say we're not going to do it. Maybe that was also, once again, management being a little bit naive, just being so blunt, potentially. And I thought, hold on, your stock's just dropped 30%, you should be doing a share buyback, especially when you look at PDD, they've got, really good amounts of financial health, cash on the balance sheet is insane, maybe this is the time to use the share buyback. And then I thought, hold on, I thought to myself, maybe they shouldn't, because I looked at something like Alibaba, and Alibaba's probably been another frustrating stock that, is a Chinese stock, and this one is currently trading at, what's this one trading at? 9 times forward earnings, and these guys are starting to come back with some good numbers. And during that time frame, what have Alibaba done? They've done, countless amount of share buybacks, dividends, and what reward did that get Alibaba on the share price? Basically nothing. Alibaba probably have spent billions, and they probably sat there going, hold on, we've just spent billions on our balance sheet, and do you know what reward it got us? Nothing. Like, the stock has really not done anything at all in the last kind of year or two. So if you look at Alibaba, you look at them going, guys are going, oh, let's just see if it's worth doing a dividend and a share buyback, and you go, probably not. And Alibaba's another one that you sit at that is probably doing the better numbers it's done for a while, and it's at a more of attractive valuation, and even that's not moving on. You look at JD.com, and this is 9 times earnings, and you look at these guys. I think that even today, I think JD.com have just announced another share buyback, and what has the stock really done for JD? They've paid these big dividends out, they've got the share buybacks, and the stock's down 5% year to date, and it's like, why burn all this cash in the balance sheet if the market isn't going to reward you for it? But the other thing as well, compared to JD and Alibaba, is that I think these are two attractive stocks at decent valuations, that numbers are starting to do a bit better. But the big difference is, like, I looked at JD.com, for example, and this company is expected to grow this year at 4.5%, next year at 5%, and you're getting this company at what, 9 times earnings? I mean, let's be realistic with PDD. Even with the downgrade in profitability that they're going to reinvest into the business going forward, and it's going to grow a little bit slower than what it has done previously. We've seen it at the high double-digit growth for a long time. It might slow down to 20-30% going forward, which we knew was going to happen at some point. Even if this company grows at 20-30%, the company is still at the same sort of valuation as like a JD, for example. But yet the growth is going to be, what, quadruple? I don't know the word for 6 times. 6 times the revenue growth of JD.com. Like, even with the pull down in the profitability, like, it's still going to be the same sort of valuation. It's going to be growing a lot more. And the potential long-term game plan with like Temu is a lot bigger with PDD. I just, it's one of those where I was like hitting my head on the wall yesterday, like, why is this happening? Like, it just doesn't make sense. And, a few people might post in the comment section like, oh, it's Chinese stocks, don't buy Chinese stocks. But, yeah, I kind of get that element now. But, previously to that, I owned JD.com in 2018. And I think JD.com ended up being one of my best performers. The stock did really well for me. I think, there was times where we were selling JD.com back, for a 400% return in, 2021, for example. 300% returns as well. One of the best performers of the stock market channel. We look at Alibaba. I remember buying Alibaba back in the likes of 2018, 2019, when that was also having a dip. And, I remember selling that out for 100% return in 2020. And now you look at the stock going, back down to these sort of levels, and you think, oh, it's an opportunity. But there's a point where you start looking at these stocks now, and, they've been in this dip for like a year, 2 years, and what else does the market want for them to kind of kick on? And it's making me a little bit. And I would normally say, like, if it's a great company at great prices and the fundamentals just get better and better, buy the stock, buy more of it. That's what you want to do. And Normally I'd say the case, but I'm looking at all these stocks. I mean, I don't own JD.com anymore, but I'm looking at the likes of Alibaba, I'm looking at the likes of PDD, and I think, you would normally say, like, just if it's a quality company and it's doing the financials keep going in the right direction, at some point the share price will follow. But I'm looking at these stocks here and I'm thinking, what more can they do? Because the valuation is historically as cheap as what they have ever been. The growth is starting to either return to them or is still very strong in PDD's case. And they're even doing all these, share buybacks and dividends, which, I was saying earlier, like, I'd be looking at Alibaba now that have done all their share buybacks, all the dividends, and what has the stock got in return? Absolutely nothing. And you look at them and I'd normally be like, keep buying quality businesses where the financial fundamentals are improving. But in this case, you're like, if the stock wasn't rallying off PDD when it was growing at like 90% a year with 20-30% EPS beats, what's it going to take to rally? I don't know. And it was just frustrating, and I don't know if, like, over the next kind of few days I'll think about it and go, you know what, yeah, eventually that share price will, follow the financials. But it's just been frustrating that you hold the stock and in that time frame you've seen the revenue double, the profitability triple during that time frame, and yet the share price has no rewards. And as soon as, like, there was an element of like, oh, it's going to be a little bit slower growth going forward, which we knew about, the profitability is going to be a little bit more stagnant as we reinvest into the business, which we kind of knew about, and isn't a bad thing now the profitability margins have matured. And then all of a sudden, you get slapped around the, not even slapped around the face, you got slapped around the face 5 times and then get pushed down off a 10-story building. It's I don't know. And right now, like, I got asked on the Discord yesterday, and I thought, people were saying, like, are you going to buy the dip in PDD? And I was like, I don't know. Because I've held this stock for a year and I've seen it do absolutely ridiculous numbers. You don't get rewarded, and then as soon as there's a little bit bad news, you drop. And then you look at all these stocks now that are these valuations, but yet nobody's buying them. And it's like, is it just a point of view now where, Chinese stocks are just not wanted anymore? Like, have people kind of, given up on Chinese stocks, even though they're good valuations, doing all the share buybacks, all the dividends, historical low dividends, the growth is returning, all the stories are coming back for how the company's performing. Surely by now, I look at something like Alibaba, and I still look at Alibaba and I still don't know how it's still not really kicking on, even though the financials are a lot better. Like, how is this, like a stock like Alibaba still at $81, the same price where it was back in, 2016, 2017, back at these sort of levels, it's even lower than them potentially. How have we seen a stock go back 8 years on share price, but yet the financials are so much higher and are now improving with the share buybacks and dividends? It's a head scratcher. So, with PDD, I don't know. Like, at the moment, I'm kind of getting over the stage of frustration with it, and then I'm gonna have a think about, like, where do I go from here with this one. I'm not going to sell my shares. I think it'd be ridiculous to sell the shares at these sort of levels. But normally I'd be all over buying the dip, and I don't know. There's something I don't know if it's like just the frustration at the moment that's stopping me from buying, or do I have to rethink around Chinese stocks? I don't know. But it was just, yeah. It was a frustrating day yesterday, and even today, just making this video is getting me more frustrated. Where I don't want to think about buying it at the moment, but we'll see. We'll see what happens. So yeah, that's where we're at with that one anyway. Not sure if I gave much constructive information there, but I needed a rant. So thanks for listening. Thanks for watching, guys. See you in a bit.